When you've got the SpaceX IPO, then you've got the Anthropic IPO, then you've got the OpenAI IPO. All these capital managers and hedge funds and retail investors want an allocation into these premier equities. This is the new internet. This is the new wave, the new bubble. And you're clearly seeing a capital rotation out of things like Bitcoin and into these other things. Bitcoin is money. SpaceX is a company. They're not competitors. At the margins, risk capital is going to, in a month or 2 or 3 or 4, whatever, who cares? The same investors are going to be selling their SpaceX equity because it had a successful IPO, and they're going to be rotating back into Bitcoin.
Last week's crypto market sell-off caught many investors off guard. Bitcoin experienced one of its sharpest pullbacks in recent months. ETF outflows surged, and fear quickly returned to a market that only weeks ago seemed unstoppable. As prices fell, social media filled with predictions that the bull market was over, institutional demand had disappeared, and Bitcoin's best days were behind it. But according to Strike CEO Jack Mallers, the real story may be far different from what most investors believe. In his latest Mailbag Monday episode, Mallers argues that what we're witnessing isn't necessarily a collapse in confidence surrounding Bitcoin. Instead, he believes we're seeing a temporary shift in where capital is flowing as investors chase opportunities elsewhere in the market. His explanation centers on one of the biggest investing themes of 2026, artificial intelligence. With several highly anticipated technology IPOs dominating headlines and attracting enormous institutional interest, Mallers believes a significant amount of risk capital is being redirected away from Bitcoin and into some of the most sought-after artificial intelligence and technology companies in the world. Rather than viewing this as a direct threat to Bitcoin, he sees it as a normal market cycle where investors rotate capital toward the newest opportunities before eventually seeking value elsewhere. But that's only part of the story. Later in the episode, Mallers turns his attention to one of the most dramatic developments in the crypto industry this week, a privacy-focused cryptocurrency that saw billions wiped from its value after revelations surrounding a critical vulnerability shook investor confidence. What happened, why it matters, and what it could mean for the future of crypto security may surprise you. Before we jump in, make sure to like this video, subscribe to the channel, and turn on notifications so you never miss our latest market analysis. Thanks, and enjoy the video. Every cycle, people make money in crypto. Every cycle, people lose it to hacks, exchange collapses, and compromised accounts. iTrustCapital's premium custody fixes that. It's a closed-loop system. Crypto goes in, but withdrawals only come out as USD to your verified bank. Nobody can drain your wallet because there's no external wallet to drain. Assets are held one-to-one, off-balance sheet, with full tax reporting. And inside an iTrust IRA, gains can grow tax-deferred, or tax-free in a Roth. Real U.S. customer support. $100 bonus when you fund through the link below. Same market, smarter structure.
What is happening right now, in my opinion, when it comes to Bitcoin is what's called a capital rotation. So seeing so much outflows in the Bitcoin ETF. So this tweet reads, spot Bitcoin ETFs see $1.7 billion in outflows, extending the redemption streak to 4 weeks, 4 straight weeks of outflows, which means more people selling and redeeming their IBIT than buying. So more sellers than buyers, okay? BlackRock's IBIT is leading the exits alongside Fidelity and Grayscale. Now, when we go to this tweet from Macroscope, by the way, unbelievable Twitter follow for those that are looking for a follow. I have him on notifications. Legend. His tweet reads, just in case anyone didn't understand that this Bitcoin sell-off is mostly a capital rotation story and not Bitcoin specific. It's very easy to click sell IBIT in the brokerage account and free up funds for this. In the long term, Bitcoin will continue to greatly benefit from creation of an ETF. It also becomes more susceptible to short-term capital rotations by mainstream investors. This rotation should slow, may already have started in the past day, and then eventually reverse. And he's quote tweeting a quote that's talking about the SpaceX IPO. And when you see these outflows and capital rotation, what people are saying when they mention this is that when you have, there's a few things. One, let's just take the ultimate step back. When the U.S. economy is starting to boom again, money is going into the economy and out of financial assets. The best example to understand this are the large cap tech companies like Meta, Amazon, Microsoft, Google, these businesses have gone from taking all their cash flows, billions and billions and billions of dollars, and doing stock buybacks where they're pouring their cash into financial markets. And now they're pouring their cash into large, capitally intensive AI buildouts. And so that is bearish the equities and bullish the economy. The money is going into the real economy and out of the equities. And you've started to see this. It doesn't necessarily mean that their stock price goes down, but it means that the multiple, like you're starting to see the multiple compression, and people say, oh, that's AI compressing the multiple. At the end of the day, everyone's going to come up with their own narrative. But the point is capital, cash is going into the Main Street economy and out of financial markets. This has also been a bit of a drag on Bitcoin. When people need to raise cash, they sell things that were saving their cash, whether that's gold, whether that's treasuries, whether that's Bitcoin. And so you see Bitcoin sell off when people need to raise cash. It's always sell what you can, not what you want. And because Bitcoin's so accessible, it's such a free market, 24/7, 7 days a week, 365 days a year, you can sell Bitcoin in any currency at any time. It's the easiest way to raise cash. And so for one, because the economy is starting to boom, you're starting to see this tension between the Main Street economy and financial markets. And you see this in things like semiconductors, et cetera. The other thing are these IPOs and AI sucking the marginal risk capital away from the other financial assets like Bitcoin. When you've got the SpaceX IPO, then you've got the Anthropic IPO, then you've got the OpenAI IPO. And all these capital managers and hedge funds and retail investors want an allocation into these premier equities. This is the new internet. This is the new wave, the new bubble. And you're clearly seeing a capital rotation out of things like Bitcoin and into these other things, which is fine. It's not the end of the world. It doesn't mean that AI. Here's the thing. Bitcoin is money. SpaceX is a company. They're not competitors. At the margins, risk capital is going to, like, in a month or 2 or 3 or 4, whatever, who cares? The same investors are going to be selling their SpaceX equity because it had a successful IPO, and they're going to be rotating back into Bitcoin. They're not one-for-one replacements. They're not competitors. SpaceX equity is not money. It doesn't matter. But I just want people to understand what's happening here. What's happening here is capital rotation. It's clear as day to see when you have these large outflows from the ETF, and it coincides with all of the brokerages instructing people on how to get allocations into these blue chip IPOs. It's very simple. And on the back half of all of this, as I said, Bitcoin is a functioning smoke alarm for fiat liquidity. And so when you have a combination of conflict in the Middle East, the Strait of Hormuz remains closed, oil market remains in relative shock, and it's bleeding through strategic reserves and might re-enter new price discovery that could threaten recession and really do even more damage that's already been done to Western bond markets. On top of that, you have some of the biggest technology IPOs, at least in the last 26, 27 years, but probably ever. And what Bitcoin is saying is there isn't enough filthy fiat to support this filthy financial system. All of this debt, all of these bonds, all of this war, all of these tech bubbles. If you want to support this financial system, you're going to have to print more money, or else you're going to start to see things fall apart, or else you will enter a recession.
Maller's core argument is that Bitcoin's recent weakness should be viewed through the lens of capital rotation rather than a fundamental breakdown in the asset itself. In his view, investors are temporarily reallocating funds towards some of the largest and most anticipated technology offerings in modern market history. However, while Bitcoin's pullback may be largely explained by investor behavior and capital flows, another story unfolding in the crypto industry raises a very different set of concerns. Over the weekend, privacy-focused cryptocurrency Zcash experienced a dramatic collapse after reports surfaced regarding a critical vulnerability tied to its privacy infrastructure. Billions of dollars in value disappeared as traders rushed for the exits, reigniting long-standing debates about security, transparency, and whether some crypto projects may be taking risks that Bitcoin intentionally chose to avoid. It's a story that goes far beyond price action and speaks directly to the future of trust in digital assets.
So what happened with Zcash, Claude, this Claude model that was previously not available to the public because of just how good it was at finding critical security vulnerabilities, Claude Opus 4.8 uncovered a critical Zcash bug, and it was an inflation bug. Zcash crashed. I think this tweet was 27% down on the day, but I think it got up to 50% down on the day. So in one day, its price dropped in half. I just want to say something about this. Obviously, everyone knows I'm not a fan of altcoins. You could call me a Bitcoin maximalist, although I've been around long enough to know that Vitalik Buterin created the term Bitcoin maximalism as a slur. And so I don't necessarily like to use it because he created it to imply that there are people that aren't open-minded enough to consider other currencies and other projects and other pre-mined tokens. And so those people over there, those are Bitcoin maximalists. Those are rigid, angry. You don't want to piss them off because they woke up on the wrong side of the bed. And then you have these open-minded people that wouldn't mind entertaining the idea of buying my pre-mined token. That's why he invented the term, just for those curious. But anyway, I'm not a fan of shitcoins. I think they're all garbage. I don't think they've innovated and solved a real problem. I think they're an arbitrage on the trend. They're both a regulatory arbitrage and an information arbitrage. They are taking advantage of, if the securities or equities market tried to do what they do, everyone would go to jail. So it's a new industry that isn't properly regulated. So there's a form of regulatory arbitrage where they get away with things that like printing tokens out of thin air and paying Justin Bieber to tell a bunch of 18-year-olds on Instagram to buy it. If someone did that with equity in a company, they'd go to jail. But because it's a crypto, it's legal, I guess. So there's a regulatory arbitrage, and then there's an informational arbitrage, which is how can I make money on this technology trend? Well, most people don't fundamentally understand any of these things. So I could tell them that they're late to Bitcoin, and I built the faster Bitcoin, the more private Bitcoin, the smart contract Bitcoin, the even more decentralized Bitcoin, the lighter Bitcoin, the Chinese Bitcoin, and I can sell it to them. I can create it and sell it to them, and they don't know the difference. As long as the marketing budget is high enough and the brand is good enough, then that's the best way to monetize this technology trend, is I call it an arbitrage on the trend. It's both regulatory and informational arbitrage. And so Zcash was marketed recently as the privacy Bitcoin. And the way Zcash achieved this is, through to greatly oversimplify it, because that's what this show is about, in my opinion, is by the common man for the common man. Zcash prioritized security. It prioritized privacy at the expense of transparency and auditability. One of the things that's been highly debated in the Bitcoin technical community for years, guys, I've been in the Bitcoin space for almost 14 years, okay? This has always been a highly debated and just topic of conversation in the developer community, is we can make Bitcoin transactions more private, but then it gets a lot harder, in fact, technically impossible in some cases, to actually audit the Bitcoin supply to Bitcoin transactions. Because if you use certain privacy tools, you can't actually tell how many Bitcoins there are. What if someone created more than 21 million? And so there's this very natural trade-off between simplicity and auditability and privacy. And that's why you hear people say things like, well, you can actually take great strides with privacy on a second layer, like Lightning. You can solve privacy on side chains. You can solve privacy on second layers. But at the very fundamental base blockchain layer, we want to keep it on layer one. We want to keep it as simple as possible, because Bitcoin needs to be auditable, transparent, and it just needs to work. It needs to be money. And what's funny is now that all of these AI models are getting so good, the rate of hacks in DeFi and the rate of bugs in shitcoins is through the roof. People would say all the time to me, oh, these DeFi lending markets are so much cheaper than Strike lending. Like, aha. And it's like, I don't know how long you guys will be laughing, because I don't use any of these shitcoin DeFi things that Claude is going to find a bug in and your money's going to disappear. I also don't encourage people to store money in something that's trying to sell you the private version of Bitcoin. Guys, Bitcoin attracts the brightest minds in the world. It's a top 10 asset in the world. It's been around the longest. It's not as if any of us haven't thought of these ideas. Zcash didn't come up with anything that Bitcoiners didn't come up with. The Bitcoin community decided it was irresponsible and it was dangerous. And it's just these people are arbitraging the trend. Hey, I have the private Bitcoin to sell you. I have the faster Bitcoin to sell you. I have the slicker Bitcoin to sell you. I have the Justin Bieber Bitcoin to sell you. I have the gaming Bitcoin to sell you. No. You have a version of Bitcoin that was deemed irresponsible and dangerous, but you're going to repackage it, put a nice logo on it, print a bunch for yourselves, and go sell it. That's what you have. And now the coolest thing about AI is the marginal cost of knowledge work is going very close to zero. The marginal cost of intelligence and knowledge work for me is $200 a month. That's what I pay Anthropic. So in order to find bugs in all these shitty software, in order to do models on all my interesting ideas, in order to write software for all the things that I want to build, in order to explore philosophy for all the ways I view the world, it costs $200 a month. And so the marginal cost for you to access truth is just so cheap nowadays. It's great. So anyway, just be careful, man. Like, there's no faster Bitcoin. There is no privacy Bitcoin. These things are dangerous. The Bitcoin community decided not to do these things for a reason. And now you have Zcash with an inflation bug. Nobody knows how much Zcash there is anymore.
The two stories discussed by Mallers may appear unrelated at first glance, but together they reveal something important about where the cryptocurrency industry stands today. On one side, investors are navigating a massive wave of capital rotation as artificial intelligence companies capture the imagination of Wall Street and attract enormous amounts of fresh money. On the other side, the industry continues to face critical questions about security, transparency, and which projects can truly withstand scrutiny when markets become stressed. The Zcash situation highlights exactly why those questions matter. Reports surrounding the vulnerability triggered panic not simply because of the flaw itself, but because of what it potentially revealed about the challenges associated with highly private blockchain designs, even though the issue has reportedly been addressed. The event reminded investors that trust remains one of the most valuable assets in the entire crypto ecosystem. When uncertainty emerges around supply integrity or network security, markets tend to react swiftly and often brutally. For Bitcoin supporters, the episode reinforces an argument that has existed for years. Simplicity, transparency, and auditability may not always generate the most exciting headlines, but they often become increasingly valuable during moments of crisis, whether investors agree with Mallers' views or not. His broader point is clear. As artificial intelligence, technology IPOs, and new crypto projects compete for attention, the market ultimately rewards systems that can earn and maintain trust over long periods of time. At the same time, there is reason for optimism. If the recent Bitcoin weakness is truly driven by temporary capital rotation rather than deteriorating fundamentals, history suggests that investor attention can shift back just as quickly as it left. Markets evolve, narratives change, and opportunities emerge where fear is greatest. While uncertainty remains elevated, both the artificial intelligence revolution and the continued growth of digital assets could ultimately coexist rather than compete for the same future. If you enjoyed this analysis, be sure to like the video, subscribe to the channel, and share it with anyone following Bitcoin, AI, and the broader crypto markets. Thanks for watching, and we'll see you in the next video.